Hello and welcome. In this video series on stock market for beginners, I will be teaching you the basics of stock market, assuming that you know nothing about it. We will start from the basics and work our way up to the intermediate and advanced levels. By the end of this course, you will completely understand what a stock or a share is, why we need a broker, what are exchanges, how the price of a stock moves, how to buy or sell stocks, and much more. Okay? In simple words, you will learn how the stock market works. And one more important thing is that this video series is not specific to Indian stock market. This is a series which is applicable to all stock markets across the globe. So, what you learn in this video series will hold good even if you are from a different country. Alright? So let's start the video series with the first question. What is a share or what is a stock? To answer this question, I will take the help of two stories. One, a short story, and another one, a long story. So let's start with the short story. So there is this boy. This boy has made a pizza. Alright? So this boy has made a pizza and it cost him 100 rupees to make this pizza. Okay? And what he does is he makes 10 slices out of it. Okay? He makes 10 slices out of it. Now, he doesn't need all the 10 slices. So he decides to keep 6 slices to himself. Alright? So that is worth 60 rupees. And then he decides to sell the remaining 4 slices. So he has 2 friends. Let us take for example, alright? He has 2 friends. Now, this boy can buy all the 4 slices for 40 rupees. Okay? So it is 10 rupees per slice. This boy can buy all the 4 slices for 40 rupees. Or this boy can buy 2 slices. This can buy 2 slices. Okay? Or this boy can buy 1 slice and this boy can buy 3 slices. Alright? So available to buy is 4 slices at rate of 10 rupees per slice. Alright? So this is first story. I am going to come back to this story in the middle of second story. Alright? So let us start our second story, which is about 2 friends. Alright? 2 friends. Now, 2 friends one fine day decide to start a business, and since they know about coconuts, they decide to start a coconut oil mill. Okay? And they name their business as Oli. Now when we say an oil mill, it needs a building, it needs machinery, it needs coconuts. So there are expenses. Correct? So for initial expenses, they borrowed some money from the local bank. And then they started their business in a small space. So the business, what does it do? It makes coconut oil from coconuts. Okay, so they take coconuts, buy coconuts, and they make oil out of it. Now, the business was successful. after some time. People started to buy from their shop, and those who bought from the shop started recommending them to their friends, and so on. Okay. However, they made little profit because all their earnings were invested back into the business, since the customers were increasing and they had to meet the growing demand. And also they had to pay back their loan which they had taken from the bank. Correct? So 5 years later, this goes on, and 5 years later, the bank loan is paid off, and the mill is earning a profit of 10 lakh rupees per year. Okay, 10 lakh rupees per year. Now, if you have a pen and paper, it is you can take it. Okay, because I will be explaining this with basic math. I'm not going to go in too deep. All right, so it will be small numbers and simple mathematics, so you can do it along with me. All right, so you can pause the video and go get your pen and book and come back. All right, yes, so they are earning a profit of 10 lakh rupees per year, and then the mill has a book value of 20 lakh rupees. Now what is a book value? Book value is the net value of what the company owns. Okay, so what does the company own? Company or the business own? It owns land, correct? Company has its building on a piece of land, correct? So that land has some value, and then the business has some machinery and the building itself, some equipments and furniture. Okay, so these are basic examples, right? Basic examples or basic things. I've not considered many more things here because I do not want to confuse you. All right, but these have some value, and the value of these is 20 lakh rupees. Okay, so the book value of the company is 20 lakh rupees. Now this doesn't involve any loan. Okay, this doesn't involve any loan. So this minus any loans is the book value. Next, since their business was a success, they want to expand their business, and they plan to open 3 more branches. Okay, 3 more branches in different part of the city. Now, after a detailed study, they find out that it's going to cost them over 75 lakh rupees to open 3 branches or 3 outlets. Okay, so 25 lakh rupees per branch. Now, to find this 75 lakh rupees, they have 2 options. One is to take out a loan from the bank. Okay, so banks are ready to give loans, or they can sell a part of their company or business. Okay, they can sell a part of their business to outsiders. All right, and since the interest rates are high, the friends decide to sell the part of their company. They want to take the second way. Now, the big question is, at what value should they sell the part of their company or parts of their company? Okay, so they want to sell, correct, but at what value? What would be the cost of a share in Oli? All right, to know this, they go to a person called as underwriter. Okay, the company has to be valued, and the person who values a company is called as an underwriter. Okay, underwriter. So the friends approach an underwriter and asks him to valuate their company. The underwriter checks many things, all right, many things. So he checks past records of the company and future growth of the company, prospects, and many other things, all right. So let us not go in too deep about this concept. So he checks everything and he decides that the company is worth 20 times its current profits. Okay, so the company is worth 20 times its current profit. Now, current profit is 10 lakh rupees per year, correct? And the underwriter says the value of the company is 20 times the current value, profit. So 20 into 10 lakh is 2 crore rupees. 2 crore rupees plus 20 lakh rupees. What is this 20 lakh? This is book value. Gives 2.20 crore rupees. So the business that the friends have is worth 2.20 crore rupees. Alright. Now, the friends decide to keep 60% of their company. Okay, so I'll come back to this concept later, do not worry about it. The friends decide to keep 60% of their company. So 60% into 2.20 crores is this 1.32 crores. And they decide to sell rest 40% to the public. Okay, they want to raise money, correct? They want to raise money to start 3 more branches. So they decide to sell 40% of 2.20 crores to the public. So which comes to 88 lakh rupees. All right. Now we will go back to our pizza example. All right. So this boy who owns this pizza, has cut it into 10 equal parts, correct? And he decided to keep 6 parts or slices to himself and sell 4 slices to his friends. In the same way, the friends decide to split the company into 1 lakh shares. Okay, 1 lakh shares. I'll come to what is shares later. But they decide to split the shares into 1 lakh. Just like the boy split the pizza into 10 slices. And out of this 1 lakh shares, as I mentioned, the friends want to sell 40%. So 40,000 shares are available for the public to buy. And at what price? So at what price they give out to the public is called as issue price. Alright? And 88 lakh rupees was our calculation. Okay, you can go to the previous slide and you can see it. So 88 lakh rupees. So 88 lakh rupees divided by 40,000, which comes to 220 rupees. So 1 share of this company costs 220 rupees. Just like 1 slice of pizza costs 10 rupees. Okay, so you can relate it with that example. So 1 share of the company costs 220 rupees. So if some person wants to buy 1 share of the company, then he has to pay 220 rupees. Okay. Now, what is a share? Shares are units of equity ownership in a corporation, or in simple words, a share is a unit of ownership of a company. Okay. Now, what is equity? Do not worry about it right now. Alright. So, what is unit? Unit. So, if you have done your schooling, you know that we have units. Unit of length is meter. Unit of time is seconds or hours. Okay. So we have units. kg is a unit. Similarly, share is a unit of ownership in a company. Alright. So if you own one share of a company, then you own the ownership of that company. Not entirely, but a part of it. Alright. So share is ownership in a company. Okay. Now, the friends decide to sell 40,000 shares. People come and buy those shares. Okay. So people are ready to buy those shares, and so they buy all the 40,000 shares, and these friends get 88 lakh rupees to them. Okay. These friends get 88 lakh rupees that they wanted. Now, of course, these two friends lost 40% of their company, stake in the company. But then they got 88 lakh rupees in cash. Now they have the money that is required to expand their business. And as planned, they open 3 new branches or outlets for 75 lakh rupees. So the remaining balance is used for day-to-day operations, okay, of the 3 shops. All right. Now, time goes by, and after some time, the stores hit a profit of 10 lakh rupees per year. So the new 3 outlets are earning 10 lakh rupees per year each. All right. That means total profit is 40 lakh rupees per year. So 10 lakh rupees per year. How many stores? 4 stores. So 40 lakh rupees per year. Okay. And 2.20 crores into 4 stores is 8.80 crores. So how did we get 2.20 crores? So you can go back and check. Alright. So the current value of the company is 8.80 crore rupees. Alright. So this is the value of their business now. Now let us proceed. 8.80 crore into 60%. What is this 60%? 60% is what these friends, not brothers, friends own. Okay. So 5.28 crore rupees is what these friends own, and 8.80 crore into 40%, which is 3.52 crore rupees, is what these investors, I can say, or the people who bought the shares of the company have. Okay. So they paid 88 lakh rupees initially, but now they have 3.52 crore rupees. Okay. So this is what they have now. So let us go to this. Issue price was 220 rupees, or each share of the company was sold at rupees 220 rupees. So you know the math, correct? Current price is 3.52 crore divided by 40,000, which comes to 838 rupees. So the price of each share of the company is now 838 rupees. So it was 220 rupees and it is 838 rupees now. So you can see, if I had bought a share of Oli company at 220 rupees some months or years back, its value would now be 838 rupees. So you can see I have become rich. Alright, so this is the concept. Now, these investors who had bought shares at 220 rupees each have turned it into 838 rupees each. Now what they can do is keep holding those shares. Okay, If they think that the business will do well and the value of the business will rise and their share price will rise, then they can hold the shares or keep the shares to themselves. But if they think the time is enough, they have held it for a long time, or if they think the company will not do good in the long run, then they can sell the share to others. Okay, they can sell the shares to others, and this is what happens in stock market. So there will be buyers of share and there will be sellers of share. So if you think the company will do good or grow more, then you can buy the shares of a company. If you think they will not do good, then you can sell the share of a company if you already have it. Okay, so this is what a stock is. Stock is unit of ownership of a company, in simple words. All right, that's it for this video. I hope you have understood what a stock or a share is. In the next video, we will learn what a stock market is. But before we move on to the next video, I have an exercise for you. I want you to go to google.com and search share price of and then name of a company. Okay, you can type in the name of a company that you like or you know. All right, so let me type in Tata Steel. All right, I have recommendations here, so I'll say Tata Steel. So when I say that, I get this result in Google, and you can see that the current price of share of Tata Steel company is 112.10 INR, Indian rupees. Okay, that means if I want to buy one share of this company, I need to pay 112.10 rupees. Okay, now this will change tomorrow by the time I will be buying it, but right now if you want to buy it, this is what you have to pay. Okay, so do not worry about all these things. We'll see or we'll learn about this in later lessons. Okay, so here you can say TVS. All right, share price of TVS, and you can see it is 1104 rupees, meaning you have to pay this much to buy one share of this company. Okay, so go ahead and do this exercise and then proceed to the next video. All right, so I'll see you in the next video. Till then, take care and thank you for watching.